was to talk about the sales process. And the sales process is not so much mechanical as it is part of building that relationship, that rapport and trust, so that it puts you in a better position to make a good faith recommendation each and every time. And that's what's needed, is to make a good faith recommendation each and every time. There are certain things that come first, prerequisites perhaps, knowing your product inside and out, understanding the limitations of your product, and also, of course, making sure that you understand the compliance aspect of your product. It's optional. It's not required to obtain the loan. It's not part of the credit decision. It comes at an additional cost. Above and beyond that, you're making that relationship connection with your customer. And there's certain steps that you take to build those relationships, because relationships are what matter. It's not just about completing a transaction. It's about building that rapport and trust under which that umbrella of the relationship where transactions happen. There are steps that we consciously take, especially in community banking. We take those steps pretty much as a matter of habit. I've kind of marked them out with a neat acronym I call BASIC. If you'll take that top page, you can see down the line, it's BASIC horizontally on the page. Let's go to the telestrator. B stands for build rapport and trust, and that's the first step of any relationship, because ultimately that first decision that customer makes is, do I trust this person? Do I want to do business with this person? It's not the bank, it's not the products, it's not the cost. The first decision that they need to make is, do I want to do business with this person? If that's the case, build that rapport and trust. Because the definition of rapport is common ground. You can use the application to ask those questions that build that rapport and trust. But step beyond the application. Talk about hobbies. Talk about common interests. Cars, kids, what have you. Build that rapport and trust. It does a couple of things. One, it stops them from shopping around. Two, you've taken a genuine interest in that customer. And three, when you get ready to say those magic words, here's what I recommend and here's why, you're in a better position to recommend a product that makes sense for that particular customer. Don't take that step lightly. Building rapport and trust is that basis for the relationship. And it comes through the next step, A, asking good questions. And there are a lot of good questions that you will ask. For instance, in the application, you have to ask, where are you employed at? You can expand with that question. You know, how long have you been there? What do you like about that company? What kind of benefits do they offer you? And make it a natural part of the conversation. That way you take an active interest in what's important to them. Ask a lot of good questions, because what will that lead to? It will lead to making solutions or recommending solutions that are appropriate for that customer. Asking good questions can also open the door for additional sales opportunities, other bank products that may be available to them based on what you've learned about that customer. So it's not limited to just payment protection. It can also open the door for other product offerings. Asking good questions, you should always take that seriously. Again, use the application to couch those questions, and these lead and illuminate the need for solutions. When they come into you, there are certain needs that they have to fill. They may need a new car. They may need to send a kid through college. They may need to improve a home. You have loan products specifically for those particular needs. You can also help them manage the risk of borrowing money. In its simplest form, when a customer does a loan, you measure a lot of things. You measure their income, their debt-to-income ratio. You measure their ability to repay. You measure how well they paid their creditors in the past. Then somebody makes a decision. I'm going to give this guy a big pile of money, and we're going to ask for it back in little bits and pieces with a little bit extra. That way we can keep the lights on, provide a return for our shareholders, and hey, pay our employees from time to time. We hope that they pay it back month after month after month until that loan expires. And as they sit across the desk from you, they're happy, they're healthy, they're alive, and they're employed. In the next 3 to 5 years, all that can change. How do we help our customers manage the risk of borrowing money? We have products available. For specifics, make sure that you check your product card for specific instructions on your particular product parameters. Solving problems, that is the S in the basic. And that's where it all starts. Some people are afraid of the word sell, believe it or not. When you sell, you're actually solving problems. And that's the solution that you provide. S, solve problems, provide solutions. Remember, when you suggest a solution, you're selling. Leverage your knowledge and your relationship with that customer when you provide those solutions. And be prepared to tell them why. Because the why is what they're buying. They don't buy 6x6. They don't buy pre-existing conditions. They don't buy 6 months per occurrence or whatever the parameters of your product is. What they buy is the ability to repay their obligations when times get tough. When they're sick, injured, suddenly lose their job through no fault of their own, or die. The family's protected, assets that they work hard to earn and keep a lot of times with your bank, well, you don't have to dip into savings to satisfy that loan obligation. Protect the credit relationship with that bank. That's the way that you build value in those products, is to make sure that you manage the risk of borrowing money. Certainly, providing the solutions, building that rapport and trust, and asking all of those good questions and recommending a course of action doesn't come without any questions. And certainly you do need to identify those concerns. Later on, we're going to talk about some of those concerns. Some people call them objections. Those concerns are important. Mortgage people understand this keenly. If you don't identify all of those concerns and questions that they have, a closing can blow up in your face. So, how do we identify those concerns? Make sure the customer understands all the terms and conditions. Make sure the customer is comfortable with your solution. Reaffirm that they've made the right decision. Remember, once you gain agreement with the customer, go ahead and proceed to C. And C has several things associated with it. Confirm, consummate, and close. Making sure that all of the terms are correct. Thank them for their business and the new relationship. And of course, making sure that the documents are accurate and they've signed everywhere that they need to sign. That takes you through the step-by-step. Let's dig a little deeper, and on the next page, it talks about the use of a sales script. While scripting has its place in some form or fashion, when you use a script, a lot of times it doesn't sound real. It doesn't sound sincere. It almost sounds phony. It doesn't mean you don't have a plan. Just make sure it's your plan. Make sure that you're prepared to tell them not only what course of action you recommend based on that profile, but also the reason why it's important to you. Write down your message. That helps me. If something's important to me, I like to write it down. And that way, at least I know that somewhere I've got those thoughts down. But some people like to write it down. When it comes time for the real event, you're ready. You're confident. You've taken the time to build that trust and rapport with the customer, and you can sincerely recommend a course of action that makes sense for them. Above all, don't focus on the sale. Because if you focus on the sale, your customer will feel like they're being sold. But if you focus on the relationship, that's the umbrella on which sales happen. Focus on the relationship. Get to know that customer and recommend, as you would a friend or a colleague, here's what I recommend and here's why, and those are very magical words. Here's what I recommend and here's why, and be prepared to tell them why. What payment would be comfortable for you and your family? Getting an idea of a budget always helps in the discussion. What are their objectives and goals? What's important to them? Use those words. Here's what I recommend. Have a compelling reason why your recommendation fits exactly what they're looking to accomplish. Always, in order to keep that confidence for you, understand your product completely. Go through your product card, go through your policy, go through your addendum, and understand the limitations and the advantages of your product. That way you're in a better position to recommend. Have have prepared answers for questions like, what is loan protection? Why is this important? What's my payment without all that stuff? Well, we're going to take a look at some of those questions and on the next page, I put together kind of a sample loan scenario. Kind of the way that you work through that discussion with your customer. It all starts with the application. And of course, I've got here, Mr. Bill, what's the purpose of the loan today? And at this point, whatever they say, make sure that you take the time to explore that purpose of that loan. Put them at ease. Putting them at ease and building that rapport and trust, of course, stops them from shopping around. You're taking a genuine interest. It helps build up that relationship. Community bankers do this naturally. So let's say it's a car loan. So what kind of car are you looking at? I've heard those are nice cars. What do you like about them? Great, let's get some paperwork done and see if we can get that happening for you. Inquire further. The discussion opens the need for single protection or joint protection. Ask them if they have a co-borrower. This way you can make sure that you recommend the appropriate product for them. You're going to naturally ask, where do you work? How long have you worked there? What do you like about that company? Do they provide benefits such as death, disability, a variety of benefits that are part of an employee package? I don't mean pepper them with insurance questions, but as a natural course of conversation, talk to them about what they like about that company and why it's important to them. Again, just building that rapport and trust. You're going to ask about assets and you're going to ask about other relationships. I see you have your checking account with us. Do you have any other checking or savings accounts elsewhere? Do you have a 401k at your work or other retirement savings? Do you have any life insurance for you and your family? This just makes it part of the conversation and open up the dialogue for maybe additional bank products such as moving those checking and savings accounts to your branch. If they have additional investments, giving them a referral to their wealth management department. It also gauges the fact that they may take an interest in having life insurance and why it's important to them. What other debts do you have? Here's what I found on your credit report. Are there others not listed here? Many credit reports, medical collections float right to the top. And if you see medical collections, you have a point of discussion. It may open the discussion for a disability-related product. Look at that credit report. Talk to them about the debts that they have currently listed. Again, keep the tone conversational and probe where it will lead so that you might uncover other issues that may require other solutions. Great, I've got all the information I need here. What payment would fit into your budget? Have you thought about a payment amount? It's a great way to open up the discussion is what kind of budget are they looking at? Because when you go into your quoting tool, you'll be able to quote them a protected payment that falls within their budget. And right then and there, you've eliminated that one question, that payment's too high, I can't afford it. Because you've quoted them something within their budget. Bill, great news. I got your loan approved. I was able to keep the payment within the budget we discussed. Your payment, including our optional debt protection plan, is X dollars per month. That fits within your budget. How does that sound? At this point in time, you'll probably say, yeah, let's go with it. Ready to sign. Or you said, maybe I have some other questions. And on the next page, we examine some of those questions. At this time, I'd like to invite members of the audience to remember back to their first grade days when the teacher would say, please read with tone and with expression, with feeling. Everybody remember those days? Uh-huh. Well, Skip, I'm going to give you the first one. Skip, what is debt protection? And I've got some suggested responses, but if you want to shoot from the lip, go ahead. You bet.
Okay. It is a way to protect my debt in case I have an emergency like disability or family leave or something like that, to make sure my payments get made and protect my family.
Absolutely. Good freelancing it. We have some other suggestions. I'm going to go to Mr. Jansen over there. Hey, Greg, what's my payment without all that stuff, that debt protection?
Tony, on this particular loan, your payment will only be about $7 or $9 less if you happen to select these packages I recommend to you. For that small amount each and every month, don't you feel better about the opportunity of protecting you and your family against any of these unforeseen events that could occur?
Absolutely. Terry, you know what? I got plenty of insurance. I got life insurance through work. I probably got a policy sitting around somewhere. So what do I need with your stuff?
Just read this.
Yeah, if you want, with feeling.
Many of my customers don't even have a plan. It is good to see that you do. The plan you have will help your family move on from a tragedy. What I am recommending is that you leave that plan in place and not have to take this debt out of your plan for your family. Even then, if you are sick, injured, or lose your job, life insurance does not make any payments. Does this make sense?
I love it. Let's take a volunteer from over here. I can get it cheaper through my agent. You know, I think I'll go to my State Farm agent when I get off at lunch and get me some of that insurance.
That may be the case, however, that may be the only life insurance. Do they offer disability or job loss? Even if they did, do they make it easy for you? Is it affordable for you, or if times get tough, what payment will you delay? This payment or a special insurance policy? In addition, you don't have to answer health questions or get a physical. At least with this payment, which fits your budget, you know it's affordable and convenient. We have several options to choose from. Which choice looks good for you?
Of course, refer to your product card for specifics regarding your particular product. Let's take the next one. I have no family, so who am I protecting? I'm young, I'm bulletproof.
That may be the case now. This loan is for 30 years. In addition, you protect your credit with us and will not have to dip into savings to pay this loan if you are sick, injured, or lose your job. Not only will it protect a family, it will serve to protect your interests as well. Do you agree?
Notice that on each of those responses, there's a small little easy question at the end. Do you agree? Does this make sense? How does that sound? What it does is it puts the ball back in their court and kind of compels a response. Let's take the last one. You know what? I just don't want it at this time. And this specifically is for a debt cancellation product where you are able to add coverage after the funding of the loan. Go ahead.
If you fully considered your decision, that's fine. Even better news is that if you change your mind, you can add protection to your loan for the next few months. Will you think it over?
So it goes beyond selling. It's taking the time to build that solid rapport and trust. Ask good questions to establish that relationship, because then you're in a better position to recommend a solution. Of course, there will always be concerns, objections. Make sure you identify those concerns before you move on to closing. And then above all, make sure you thank your customer for the opportunity to do business with them. My name is Tony Snow. Thank you very much for watching. Have a great day.